Yeah, good morning, guys. Good morning. Good morning. How are you guys doing? How is everyone? How is everyone? How is everyone doing? Whew. It's another amazing week for us to cash out heavy from the market. So, just a few minutes while we wait for a few more people to join. As usual, if you know anybody that should be here that it's not here, do well to let them know that we have started. We are live. Okay. Welcome. Good morning. Good morning. Good morning, guys. I see you guys. I see you guys. I'm just trying to get more people to join as usual. Good morning, Chibuzo. Good morning, Real Twin Street. Good morning, Onyebuchi. Good morning. I want to get more people to join, so just give us a few minutes. Today's class is going to be fun because there's a lot to learn today. A whole lot to learn today. And I'm very excited. I'll be tackling some major mistakes I've seen a lot of traders make. A lot of traders uh, don't know how to trade reversals. They are doing it the absolute wrong way. A lot of traders don't know how to trade the retracement, doing it the absolute wrong way. So, what I'm hoping to achieve in today's training is to teach you guys how to know a market reversal and a market retracement. They are basically not the same thing. They are not the same thing. A lot of traders assume that they are the same thing, so they are trading it wrongly. What I hope to achieve in today's class is to teach you guys how to do it the right way. Okay, you guys know I'm always rooting for you, and I love hearing your success stories. And also, I want to say this for those of you that are always, sharing, your reviews with me about how much you guys are making with the weekly forex forecast. You guys are VIP, and I appreciate that you guys always take out the time to appreciate the effort that we put into making sure you guys have access to every week's analysis, every week's update. Okay, so I deeply appreciate that. Thank you guys. Thank you guys. Thank you guys. So I think I'm done sharing with the necessary groups. I think that's all. So how are you doing? If you are here with us last week, remind me what we discussed last week. If we were here last week, remind me what we discussed last week before we move straight into what we have to discuss today. Anyone, if you were here last week, remind me what we discussed last week, and let me be sure you guys have been following, because I told you guys right from when we started these live classes that we are building these things line upon line. Okay, I don't want you guys to miss out on anything. Most of the time when I'm teaching on live classes on Monday mornings, I tend to build upon what I've taught in the past. So if you've not been following the progression, you can catch up live here on YouTube. Is on the live, go to my channel, this channel. You on the live session of this channel where we have the live videos, you see all the Monday mentorship classes that you probably have missed, so that you can always catch up. Okay, these videos are here so that you can watch it as many times as possible. Okay, as many times as possible. A lot of people have been telling me to put down the videos, all the live sessions on YouTube, and monetize it. Maybe put a premium on it. So if you want to have access to our live classes every Monday morning, so that you can pay to access it. And of course, it sounds interesting, but that's not the idea. Okay, I want you guys to learn these things for free, and learn how to trade. Actually, the joy of the whole everything that we're doing as a company is to ensure that you guys are actually making real-time money from the things we are teaching, even without making any form of commitment. That's what we hope to achieve. That's the whole goal. Okay, so that with little or nothing at all, you guys can be making money with the things I teach. So I see you all. Let's know where you're joining us from. Amaka, good morning. Good to see you. Tanimola Matthew, good to see you. Mr. Oko Emmanuel, good to see you as always, sir. Tanimol, okay, good morning again. Okay, Talent said that we talked about psychology last week. That's true. A blue Zoreme Victor talked about psychology was not exactly what we talked about, it wasn't contained in what we taught. So what we actually talked about was trading plan, how to build a trading plan correctly. And good. I see you guys. Sandan Kama says how to create trading plan correctly. Exactly, that was what we talked about. So good morning. I see you guys. Agbala Chimezie, good to see you on my live session. Samuel, good to see you. Financial aid joining from Afghanistan. Good to see you. Amaka from Abuja. Good to see you. Tina from Delta. Good to see you. Tanimola Matthew from Kogi State. Good to see you. So good to see you all. I see some familiar faces here. I love this community that we are building here at Treadwave. It's always fun to be with you guys every single week. So I just want to share good news with you guys. I just turned a real father on Thursday last week. So I'm no longer FX daddy is no longer a title. I'm a real daddy now. So my wife gave birth to a bouncing baby boy. So and I've been performing some fatherhood duties so far. So as you can see, my eyes are a bit dim. But we have to do this. I thought about postponing this, but you guys are very important to me, and I've already promised you guys last week that we are going to do this. So that's why we're actually doing this. Okay. So I love you guys. I'm always here. Yeah. I see all the congratulations. Yeah. I see the congratulations. Thank you guys. Thank you. FX Daddy is now real daddy. Yeah, it's fun. It's real fun. So all you singles in the comment section, you guys should do something about your single life right now. So shout out to all the fathers in the house. And man, you guys have been doing amazing work this few days. I know what it takes. So congratulations. I see you guys. Thank you, Victor. Thank you, Ifechuku. Thank you, Sana. Thank you, Obiora. Thank you, Afola B. No, we can't let the singles breathe. No breathing phase for singles, no breathing space for you guys, man. I'm here now. Don't worry, very soon I'll start doing videos with my son at the background. Oh, God, I really love you guys, man. I really love talking to you guys every Monday morning. So today's class, we're talking about how to identify a market reversal and retracement. This is a topic that has been on my mind for quite a while, and I decided to schedule it for today. And I don't think it might not be possible to finish this topic today because I want to treat it in three phases. Number one, I'll first of all show you the difference between a market retracement and a market reversal because they are not the same thing. People think when a market is retracing, they'll call it, once you see the market maybe that was going up and it starts going down, they'll say, market is reversing, it's reversing. Most of the time, it's not really reversing, it's actually just retracing. And most of the time, when people see the market just tanking all the way down, going all the way down, they still feel okay. It's just retracing. It's still going to go up. And unfortunately, they don't know that the market is actually not retracing. It's actually reversing. You understand? So it's what I want to. I want to first of all differentiate the two for you guys. How to know when a market is reversing and how to know when it's actually retracing so that you know the difference. Okay, I have some things written down here, but some things are coming to my head as I'm teaching. You guys know I love teaching. I really love teaching. This is like my passion. Anytime I teach like this, I feel accomplished. I feel fulfilled. I'm just I feel with joy. Right. So first of all, do with difference between retracement and retracement and reversal. Then we'll go ahead and talk about the unique properties of each one of them, the unique properties of a retracement and the unique properties of a reversal. Okay. And three, we'll now talk about how to trade them properly. How to trade them properly. Okay. So we'll start off with the difference, like I've already mentioned to you guys. I can see the congratulations still loading. Congratulations. Thank you, guys. Yeah, welcome to Daddy's Club. Yeah. Congratulations. Yeah. I've traveled a few weeks. I'm back now. Okay, wow, good to see you, Rival Channel. Wow. Welcome back. It would be nice to see if you can come around to our floor in Abuja. That would be good. Good morning, Lekan from Ogun State. Good to see you. Bringing greetings from Barcelona. Good to see you guys. So let me go ahead. Let me open my Paint tool so that I can write some things down. So if you need to type something, if you need to write down something, you can have something to write. Okay. So just a few seconds. Good. I think you guys should be able to see my screen. If you can see my screen now, let me know. If you can see my screen, let me know that you guys can see my screen. Can everyone see my screen now? Okay, good. I think you guys should be able, I can see my screen, so that means you guys can see it. So let's talk about, first of all, how to differentiate, how identify a market retracement. Let's start with reversal, and a market retracement. Good. So number one was, we say we're talking about the difference. Okay. So what is the difference between the market retracement and a market reversal? Now I'll be very practical with this thing, so you guys should just follow closely. You guys should follow closely so that you don't miss out on anything. Okay. Now, the major difference between a market reversal and a market retracement is the continuation. Let me explain what I mean by that. Now, for instance, if you have, let me use a brush tool for this. Now, this is a typical what you will call a market reversal. Okay. If this, sorry, let me start. Let me go a bit more backwards. Good. So this, if the market has been in higher highs and higher lows, okay, we had a low, we had another low, we had a previous high and another higher high. Okay, when the market moves from this place, now this is a new high, and moves down, coming back and approaching this previous high, this right here, happening right here, from here to here, from here to here, is a what we call a retracement. Okay, a retracement. This is a retracement. Sorry, I can't. Let me, I think I need to just type with my hand. Let me 1 minute. So this is called a market retracement. This is what we call market retracement. Okay, that means the trend has not changed. The trend is still upwards, but it is retracing. Now, the difference between a retracement and the reversal is the next move that the market makes after a retracement. That is what a retracement has to happen before a reversal happens. You understand what I'm trying to say? A retracement it must happen before a reversal can happen. So a reversal, we can say, is an extended retracement, is what you will call over retracement. So provided that we don't first of all go below this or below this previous low and this previous high, the market is still retracing. It's still a retracement. The market becomes a reversal when we clearly take out break. First of all, there are three levels to market reversal. Okay, first of all, the first initial retracement, that's the first level. Second level is when the market breaks and closes below the most previous high. That means reversal. I'm talking about reversing from an uptrend, right? When we talk about reversing from a downtrend, I'll explain it also. Okay, so first step of for a market to become a reversal, a retracement to turn to a reversal, is when the market has first of all gone retraced bar, which is the first step right here, then break and close below a high, a previous high. Break and close. This is a previous high, and we see a red candle close below the previous high. This is the second level of a reversal. Okay, now the final level, when you want to know when the market has fully reversed, is no longer a retracement at this point, it has become a reversal, is when the market now breaks and then closes below the previous low. So this is the first level. This first move, impulsive move right here, first level. Break and close the previous high, second level. Third level is this. When the market has broken and closed below the previous low, the market is now in for a full reversal. This retracement here has now become a reversal. Are you guys following? If you're following, type something on the chat. Let me know you guys are following. Are you guys following? Are you guys following? Are you guys following? Are you guys following? If you're following, somebody said, let me highlight this comment. You guys said let's make money first, boss, before we do something about our single life. Are you guys following? If you're following, please drop something. Let me be sure you guys are following. Okay, good. I can see you guys are following. You guys are following. Fantastic. Now let's go ahead. Let's go ahead. Now, let me give you another scenario. Okay, let me give you another scenario. Okay, now let's say we are on a downtrend this time. We're now on a downtrend. The market is giving us lower lows and lower highs. This is a high. We have here a lower high. We have another lower high. Okay, here we have a low. We have a lower low, another lower low. Okay, when the market moves from here, when the market moves from, let's say, there's no more space on this. When the market moves from here to this point, from here to here is what you call a retracement. The market is still retracing. Retracement. Okay, retracement. This is a retracement. Okay, when the market now continues to move, there's no space. This is my drawing. Let me draw this correctly. There's no space, and it's not allowing me to do what I need to do very well. Okay, so we have low, good. So when the market, this is what will I designate this as now? This is a previous, level. Okay, this is a previous low, and this is a previous high. These are the levels. Okay, so when the market moves from here to here, this is called retracement. The market at this point is still retracing. This is first level. Number one, this must happen first. When the market now goes above this level, and let's say comes to this point, breaks and closes above this level, this is the second level of a reversal. The reversal has not happened, but there's an indication that it will likely happen. This is the second level. Okay, if you guys can see my screen well, set your quality of your video to 720p. Just put your settings, the gear icon you guys can see at the top of the screen. Click on it. You see a place for quality. Change the quality. Go to advanced. Then change the quality to 720p, and you can see my screens clearly in case it's blurred on your own end. Okay. Now, when the market now finally has broken above this previous low and also goes ahead to break above the previous high, break and close above this previous high right here with 2 or 3 candles, which is a third level, then this retracement has turned to a reversal. Okay, did you guys get this? If you got this now, I want to take this to another level now. I want to, because don't worry, I just need to know you guys are following. If you guys are following now, I want to take this to another level now. But I want to be sure everyone we're on the same page. Are we on the same page? Are we on the same page? Are we on the same page? If we are on the same page, let me take this thing to another level now, because I want to explain some things that are very, very key, worthy of note. Okay, good. I can see you guys are following. Good, 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 good. Fantastic, fantastic, fantastic. You guys are following. Good. Now, to spot a market retracement and a market reversal is very, very dependent on the time frame that you want to trade on. You guys have heard me say this and teach this many times, that you don't make all your decisions on one time frame. It's only amateur traders that make all their decisions, make all the analysis on one time frame and trade on only one time frame. It is a quack thing to do. Okay, as a trader, you should not be doing that. Okay, you should not be doing that. So the time frame that you want to trade on will determine where you are actually spotting a reversal from. Okay, for instance, this is gold. Did you guys watch my analysis on gold yesterday? I told you guys gold was going to fall. It's already falling. It's already falling already. This was where gold was as of yesterday. It's already falling. I predicted that gold will get to this level sometime this week. This 1858, and it's already happening. Amazing. Okay. You can still wait for a retracement to happen, then you can jump in on this. Okay. But that aside, now, like I said, let's do a multiple time frame analysis. Now, let me show you guys how to differentiate this on both levels. Now, let's assume you want to trade on a 1 hour time frame. Your entry is on a 1 hour time frame. You enter your trades on a 1 hour time frame. Your execution time frame must not, emphasis on must not be the same as your analysis time frame. If you perform your execution on the same time frame you are performing your analysis, what happens is that you would rarely get a good risk to reward. Your risk to reward will always be most of the time, it's usually 1:1. The only time you can get 1:2, 1:3 is when you are executing on a lower time frame, but you perform analysis on a higher time frame. So let's say we want to trade on 1 hour time frame, but we are performing analysis on 4 hour time frame. That means that where we are going to be spotting and looking for a reversal or retracement is on a 4 hour time frame. That way, it becomes easy to see things more clearly. So let's go to a 4 hour time frame. This is a 1 hour time frame. Let's go to a 4 hour time frame. Let me take this moving average off the way. Okay. Now, as you can clearly see what I explained to you guys, the market has been giving us lower lows, lower high, equidistant low, equidistant high. Then we went again to high, lower low, lower high, lower low, lower high, lower low, lower high. This is a progressive downtrend. Okay. Now, if you made the mistake to not take note of the fact that you're supposed to be performing your analysis on a higher time frame, if you go down to a 1 hour time frame, let me go down to a 1 hour time frame. Let me show you what this place looks like on a 1 hour time frame. This place I just marked. Let's see what it looks like on a 1 hour time frame. On a 1 hour time frame, this clearly looks like the market has actually reversed, because On a 1 hour time frame, we have lower low, a high, lower low, lower high, lower low, lower high, lower low. Then we went ahead to have a lower low, a higher low, a higher high. So if you were not taking into cognizance of the fact that you should be doing analysis on a 4 hour time frame, you might actually be tempted to be buying somewhere here. You might decide to buy here because you'll be thinking that the market has made a higher high. That means this initial retracement here has now fully become a reversal because we have broken close above the previous high. We have a higher high. We have closed above the higher low, and we have the previous low, and we now have a higher low. So you might be tempted to assume that this market, it is time to actually be buying this market. And if you actually buying in this market at this point, you would actually be wrong, because when you go back to a 4 hour time frame, you will see that the actual previous low is this place right here. Let me remove. I don't want to remove this mark because I need to make reference to it next week when I'm doing my analysis next week. So this on a 4 hour time frame was the previous low, and on a 4 hour time frame, this was the most previous high. So the market has come, and it hasn't clearly closed. As you can see, this red candle is still closing below this previous low. So the market has not completed the second step of retracement for us to now term it as a reversal. So as far as the 4 hour time frame is still concerned, this is still a retracement. It is not a reversal. Is it clear enough? Is it clear enough? Is it clear enough? If it is clear enough, type clear on the chart. Type clear on the chart. If it is clear enough, type clear on the chart. Let me be sure you guys are getting this clear. So as far as the 4 hour time frame is concerned, we are still retracing. We have not reversed. That's what I'm trying to say. A retracement has happened. This is a retracement right here. Let me show you the retracement. From here, from this place right now to here is the retracement. This right here is the retracement. From here to here is the retracement. Okay, this move you're seeing right here is a retracement. So it has not become a reversal yet. Okay, good. I can see people typing clear enough, clear enough. Okay, that's good. That's good to see. So let me go ahead and remove these things. Okay, so I needed to make these things clear because most of the time what people do is they just go down to a 1 hour time frame. Let's say they want to trade on a 1 hour time frame. Once they see this move right here, okay, the market was making lower lows, lower highs, lower lows, lower highs, and all of a sudden it started making higher lows, higher highs. They just assume that the market is now reversing and they want to trade. Okay, this would have been correct if you want to trade on a 15 minutes time frame. This would have been correct. But if you're trading this on a 1 hour time frame, that means your reference should be from a 4 hour time frame. And from a 4 hour time frame, we are still clearly on a downtrend. We have not reversed. Okay. Now, that's the clear difference. I think that should be enough to explain the difference between a reversal and a retracement. A reversal, if you want to define it, a reversal is a retracement that has gone beyond the previous highs or the previous lows. The market has now reversed. A retracement is when the market gives an impulsive move and corrects. Some people call retracement a corrective move, okay, after every impulse move. What I mean by impulse move is like from here to here. This is an impulse move. This is what they call impulsive movement in the market. The market moves long like that, trends, then corrects. Okay. Now, the second difference between a market reversal and a market retracement, I've already explained the first difference. I think I need to, because I like writing. So difference I've already mentioned is number one, extent of retracement. And number two difference between a retracement and a reversal is the purpose of the move. What I mean by purpose of the move is you need to know in the market, you need to know this, take note of this. For a sell to happen, there must be buyers. For a buy to happen in the market, there must be sellers. This move is this what I just explained now is very, very vital. Okay, for a market to buy, for a market to go bullish, there must be sellers. There must be enough sellers, even. There must be enough sellers for a market to buy, and there must be enough buyers for a market to sell. Because if you're buying a currency pair, who are you buying from? You're buying from people who are willing to sell to you. So that means when the market is going up, you see a bullish move happening. That means at upper prices, at higher prices, there are still people willing to sell at that price. You understand? There are still people willing to sell at that price. That's why the market is actually buying. Okay. And if the market is going down, that means there are some people that are still willing to buy at that price. That is why the market is actually selling. You understand? So, how to know when a market move has gone beyond retracement to now become a reversal is when the market has gone beyond and beyond what you call, I don't know how to put it, I don't know how to explain it now, beyond reasonable doubt. It has gathered enough liquidity that is supposed to sponsor a corrective move, but it is not correcting. You understand? That means the market has moved from being a retracement to a reversal. Okay. When the market has cleared enough liquidity that is enough for you to keep selling if you want to sell, but it refuses to sell and continues to buy, a reversal has happened at that point. Let me put the purpose of the move before I now go ahead and of the move. Okay. Let's go to the chart right now. Let me show you what I mean like that in the chart. Okay. Now, for instance, let me look for where a reversal happened. Okay, good, 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 good. I think this is enough. This is enough. This is enough. So now, let me use a replay button for this. Where do I? Okay, let's start from like this. Good. Now, this is a typical uptrend. If you zoom out, you can clearly see higher highs, higher lows, higher highs, higher lows. It's clear. Everybody can see the higher highs and higher lows, right? Then all of a sudden, we saw that this market gave us higher lows also. Then we have a lower high because this was like the previous low. This was the previous low right here. Then the market went ahead to do this. The market went ahead to give us, it's still moving. Good. The market went ahead to give us a lower high because this was the previous high. We're expecting that the market will give us another high, maybe somewhere here, but that did not happen. And we have a lower high here. Okay, this is a lower high. Then the market went ahead to give us a low. Now, remember that this was the last low. And when the market reverses from this point, from here to here, this is enough movement for it to gather enough liquidity to keep moving upwards. From this move from here to here, from here to here is enough liquidity for this market to continue moving upwards. Is enough. But what happened? The market came down, cleared off that liquidity that we were expecting it to grab from here and move up, and then kept moving down. This right here is a sign that from this small move, I don't know how long this will take me to explain these things. I just hope you guys understand it. Probably, I know the people that will understand this training the more are actually my students, my advanced training students. Those are the ones that will actually understand this very well because I think I've explained this a couple of times with them. This move, especially when I talked about SMC trading, I talked about this a lot. Okay, so I know they are the ones that some of you here might be lost. Sorry if you're lost. Sorry if you're lost. But this move right here is An indicative move, what we call an indicative move, indicating that a liquidity grab has happened, which should likely on a normal day indicate that this market should fly, at least get to this point. But we see that this market did not fly. It got to this point and then went ahead to break down from here to here. This move tells you that there is not enough liquidity. There was not enough buy liquidity here for this market to move up. There was not enough buy liquidity to push this market all the way up. That is why we have what you call a breakout. What you call a breakout was what happened here. And after this breakout, this is what happened. The market kept falling all the way down. So as far as if you have what I'm teaching you now at the back of your mind, once you see this red candle, the market has reversed. Once you see this red candle happen, the market has clearly reversed. There is no two ways about it. This market has reversed. So the purpose of the move can tell you when the market is no longer a retracement, it is now a reversal. That is why I mentioned this. The purpose of the move also helps you to know the difference between a retracement and a reversal. Is that clear enough? Is that clear enough? Am I making sense? If I'm making sense, you guys should let me know that I am making a lot of sense so that we can push on. Okay. Okay, somebody said a retracement is a pullback. Exactly. People call it pullback. That's another main. Retracement, corrective move, pullback move, those are called retracements. When a pullback pulls back beyond the previous low and beyond the previous high, it has now become a reversal. And when that means on in that case on a bullish move, okay, but for a bearish move, when to know when the market is done going down, is about to go up, is when the pullback or the retracement or the corrective move goes above the previous low and above the previous high. That means the pullback has now become a reversal. You understand? Okay. I can see you guys getting clear. Yes, I'm making good sense. Okay, good to know. Okay. Now, the next thing I'll now talk about right now, I think this is where we'll end this course. Like I told you guys, I will not finish course. I'll go ahead and tell you guys by next week how to know this, how to know a retracement using Fibonacci levels, moving average, and higher highs and higher lows. Okay. I'll go ahead and talk about next week. So, but before we round up today's session, because I want us to round up at exactly 12 o'clock, I want to go out and get some things for my new baby. I want to get some things for my new baby. So, I'll have to leave, very soon. Okay. So, let's talk about unique properties of retracement and reversal. Okay. Let me share my screen once again. Let me tell you guys about the unique properties. Can you guys see my screen? Can you guys see my screen? Can you guys see my screen? Can you guys see my screen clear? If you can, give me response, give me feedback. Let's go. Okay, good. You guys can still see my screen. Fantastic. Good. So let's talk about the unique properties of a retracement and the unique properties of a reversal. Now, like I already mentioned, a retracement move is just is what people call a liquidity grab move. Okay, it just wants to grab liquidity and typically just keep moving to wherever direction is actually going. Okay, now the unique properties of a retracement, this is for retracement, I'll talk about reversal. This is for retracement now, is that it follows the trend. It never goes beyond the trend. It never, emphasis on never, breaks the trend. When you see a retracement happen, it is always following a particular trend. In this case, as you guys can see clearly here, we have this right here is the retracement move. This right here, retracement move. This right here, retracement move. This one, retracement move. This one right here, retracement move. Okay. The aim of a retracement is simply to have enough liquidity to continue in the direction of the trend. Okay, that's the unique property of a retracement. I've already explained that already. With this is like what I supposed to have mentioned first, but I've gone up, ahead of myself to explain it already with the chart and with all the illustrations I gave you guys. So I think this is simple enough to understand. Okay, simple enough to understand. So for a reversal move, the typical way, let me go ahead and delete this. Now, the typical way for you to know a reversal when you simply see it is that in fact, when you see a reversal, it's easier to spot than a retracement. When you see a reversal happen, it is easier to spot than a retracement, because let me look for where a good reversal happened. Let me show you. Let me see whether I can see one on Euro USD. Let me see whether I can see one on Euro USD. Okay, good. Now, let's go here. Good. Now, you can clearly see on a downtrend, you can clearly see lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. When the market was about to reverse, in fact, I think I need to ask a question at this time. Let me know who is following me. Let me just give you guys a small quiz now. Let me give you guys a small quiz. At what point, with everything I've taught you guys, at what point did this market become a fully reverse? Let me mark, let me use it. I think I need to use this text. Number one, was it at this candle? Let me put number one. This is number one. Was it at this point, or was it at this point? Number two, was it at this point, or was it at this point? Okay, I think I need to give you guys three options right now. Was it at this point? When did the market fully reverse? Because if you can answer this question correctly, that means you already understand what it means, what the unique properties of a what's it called? Unique properties of a reversal actually means. Or number four. So at what point now? At what point did this market fully move from being a retracement to becoming a reversal? Is it at number one, or number two, or number three, or number four? Let me see your answers. Drop your answers on the comment section. At what point did this market move from being a simple retracement to becoming a full reversal? Somebody say number one, number two. Okay. Number three. Okay. Keep it coming, guys. Don't be afraid to fail. It's okay to fail, man. Even if you don't get it, it's fine. So even if you don't get it, it's fine. Okay. So don't be afraid to fail. I see we say number three. Number three, good. Number three. Don't say number three because somebody said it too. I can see somebody said two. Somebody said two and three. Okay. Somebody said it should be at number two. Okay. Somebody said number four. Okay. Okay. That's good. Keep the answers coming. I need like five more people. I need like five more people. I need like five more people to give me answers. Number two. Good. Keep your answers coming. I see them. Number three. David said number three. Akusha said number three. Akwasi said number two and three. Wisdom said it should be at number two. Tanimola, number four. Onyebuchi, number two. Afolabi, number four. Keep it coming. I need like two more people now. Two more people. Give me answers. Let's go. MS Record said number three. Who else? Last person now. The last person. Who is the last guy? Who is the last person? Number two, I see somebody said number two. Somebody said it has not changed. Okay, 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 fantastic. Now let me clear the air now. Let me clear the air. Now, from what I've taught you, I told you that when a reversal from here to here, what I've taught you, because we're having lower lows, lower high, lower low, lower high, lower low, lower high, lower low. We can say this is lower high. Then we had this move, break. This blue candle right here broke through this previous low, broke through this previous high, and closed above it. We had the second blue candle. We had doji, three dojis here. Then we had the second blue candle right here. So, on the strength of what I explained now, the trend changed on this 4-hour time frame when we had this third, that's number 3 candle, and it confirmed that the trend has changed when we had the number 2 candle. The stronger the number of candles that close above the previous high or the previous low, the stronger indication that the market actually a reversal fully happened. Because if the sellers at this point had a lot of energy, they wouldn't have allowed this market to exist at this price for a long time. So at this point where we saw this second candle close, full candle, bullish candle close, can I zoom this thing a bit more? At this point where we had the second candle close, fully bullish, we had a full indication that this trend has actually in reality changed. Because after now, we see that the market could not go below this low anymore. This is what we now have. The market rallied. From then, the market rallied from then upwards, all the way up, all the way up, all the way up. This is where the reversal happened after this number 2 candle. So if you said, the person that said number 2 and number 3 is actually the most correct. Number 3 candle confirmed that the trend has changed. Number 2 candle provided more confirmation that the trend has really changed. So most times when you see the market do something like this, after this candle has formed, this is what you call, this is the best entry. This is, if you enter after this blue candle right here, after this blue candle right here, this one, if you entered after this blue candle, this is the best possible entry on this. This is the kind of trends that I enter with my full chest, because typically this is where I'm supposed to enter, but the market went down to give me more space. So if you enter after this blue candle, this is the best possible entry. If you go on a 1-hour time frame and put a moving average on this, you will clearly see that the moving average, it was after this candle. See what I showed you guys? I didn't even know. But it was after this market, this blue candle broke and closed above. Let me remove the 50 moving average. Broke and closed above this 50 moving average. That was the indication that this market is about to rally upwards. Next week, I'll tell you how to use this moving average. I'll tell you how to use 3 things. First of all, Fibonacci level. Number 2, moving average. And number 3, lower lows and lower highs, which is one thing I've actually talked about it briefly in today's session. Okay, I'll tell you how to use these 3 things to actually spot and trade market reversals and market retracement. Okay, just before we go, a lot of people on my DM last week after I shared the news, about the arrival of my baby, a lot of people asking me for a discount, give us fatherhood discount. After much talk, I decided to actually do something like that this week. So this week, from between now and Wednesday afternoon, 12 p.m. On Wednesday, we're giving out a 30% discount 30% discount if you want to get a hold of my training program. If you want to join my full training program, we meet like 3 times every month, do brush up, strategy review. They are the ones I teach my real strategy for trading, and my master class trading psychology program. They are the ones that have access to it. I don't teach those things on YouTube, especially trading psychology and risk management. I don't talk about it much on YouTube because that's the crux of trading. 70% of your success in trading is determined by your trading psychology and your risk management. So if you suck at those two things, I don't mind sharing these things with you. I don't mind teaching you even my strategy. It's fine. If you don't know the trading psychology backing up the way I trade, with a winning strategy, you will still lose money. So I reserve the best for my students. And if you want to have access to the training, this is the website. I'll just type the website. I don't have time right now to take you through the website, but just go to www.tradewave.ng. That's the website. And the coupon code is fatherhood. That's the coupon code. Coupon code fatherhood. Okay, just use the coupon code and you get 30% off. The coupon code will be expiring in 48 hours from now. That's on Wednesday afternoon, 12 p.m. The coupon code is going to be expiring. So go to the website, grab the program, join us. Is a one-time payment, lifetime access to our training program. Okay, so you have access to over 40 training materials, pre-recorded, exclusive, highly exclusive, only for students. So even if you know nothing about it, for example, like if you know nothing, I know for some of you here right now, some of the things I'm saying are just flying above your head. You're not even getting anything. So you want to learn from the base, you want to start from scratch and learn how I do this analysis and how we make money from forex market. The program is with the link I just dropped on the description. Okay, so that said, if you learned anything, please drop a comment. Let me know you guys learned something before I go. Did you guys learn something? If you learned something from today's class, let me know you learned something. Let me know you guys learned something before I go. I go catch up, do some amazing stuff today. So that's the website, www.tradewave.ng. So if you learned something, let me know that you learned something. Let me know you guys learned something. And so we can continue next week. So next week we're continuing on the part 2, how to tell a retracement and a reversal correctly, part 2. Okay, today's part 1. Good. I can see you guys learned something good. Yes. I can see you guys typing yes. You learned. I forgot to mention, we have resumed our prop firm passing services again. I'll still make the official announcement. So if you want us to help you to pass prop firm, we've resumed the service, 100% guarantee. But there are some terms and conditions you need to agree with. Then we can go ahead and help you and secure capital. Okay. We've resumed the service. I'll be sharing the details on the Telegram channel. If you're not on the Telegram channel, I don't know where you are currently, man. Okay. So let me just drop the link to the Telegram channel for those of you who are not on the Telegram channel, so you can join the Telegram channel. Okay, so that's the Telegram channel. We've resumed our prop firm person service. More details will come on the Telegram channel. So go ahead and join the channel so you can get more information. Somebody is asking, how long does the mentorship last? It lasts for a lifetime. It lasts until you become profitable. Until you become profitable, we'll not leave you alone. We have follow-up classes bi-weekly. We have master classes bi-weekly. It keeps running like that. We meet every 2 weeks. We do follow-up classes, brush you up on the trading strategies that we teach, do reviews on your trades, know how you're doing, and then up the following week we now do mentorship classes, master classes. Okay, so thanks everyone. I think that's all for today. So I love you guys. Keep trading till I come your way. Have a wonderful trading time, and goodbye.